All right, so we had another very busy week in the markets. We had, the Fed announcement, which I'll get into first here. And again, the Fed kept rates where they were, which was what everyone expected. That wasn't a surprise. And there was a quote from Powell, which again, I think clarified things a little bit. And again, he says it's unlikely that the next policy rate will be a hike. And again, this is what I've been saying a lot now. And again, there's several reasons for that. I mean, if you look back in history, after a hiking cycle, I think it's quite literally like 99% of the time, the next move is down, not up. So that's something that I think is very likely. Now, the problem with that is that a lot of times the reason that the next move is down is because there's a crash. That's the big concern here. And if they keep raising, well, that just entices that even more. So personally, again, even though there's a lot of people talking about it, I still think it's very unlikely. And again, honestly, quite possibly the main reason for that is the Fed doesn't have as much power as people think. And if they raise, they're going to raise like 25, maybe 50 basis points, and that's not going to make a big difference. It'll spook the markets, but it's not going to make a big difference. So again, I think that the next move is down, but it's going to take longer. Like, again, if I was betting, I don't even know if I would bet that there's going to be a cut this year. It all depends on the inflation numbers. If inflation gets back down to 2%, they probably do cut. But another thing to keep in mind here is that the economy, at least based on the numbers that the government looks at, if you want to look at the real economy, I think it's debatable, but at least based on the numbers the government is looking at, the economy is doing pretty good. I wouldn't say great. I don't know anyone's really saying that. But the economy is doing all right. And that would signal that, hey, if the economy is doing okay, do we really need to lower rates? Like typically the whole point of lowering rates is to stimulate a poor economy. So that's something to look out for. But again, I'm still strongly in the camp that we're not going to get a hike, but we're going to stay where we're at for longer than what people think. And again, the other thing that came out on Friday, again, the jobs number came out weaker than expected, which is good if you're bullish on stocks, because again, that weaker economy just means that the Fed's going to be more likely to cut rates, right? So that's what happened there. And the other thing too is the Fed also announced they're going to start rolling back QT in, I believe, June. So that also, I think, is a little bit bullish. So again, that's basically what came of the Fed announcement, which again, the rate announcement was what everybody expected. The big thing was, again, how hawkish or dovish will they be? And from the looks of things, it looks like they leaned a little on the dovish side, which again is what I expected. So again, if we get into the market here, the S&P was up about 0.5% on the week. The Nasdaq was up about 1%. And again, I think that what I predicted, again, is also coming to fruition here, in that we're going to be range bound in the high 4,000s and the low 5,000s on the S&P until one of several things happens. The Fed cuts, or inflation continues to tick up, or we get a crash, or something along those lines. Until we get something that's clearly bullish or clearly bearish, I don't think that we break this range that we're in. I think that we, like I say, we'll chop around in the high 4,000s and the low 5,000s on the S&P. And again, we will see. Again, the next inflation print comes out in a couple of weeks, so that's going to be interesting to see. I think that, again, it's looking like it's going to stay sticky. That's something that I don't think is too hard to predict. The real question is, again, what happens in the more long term? And this is something that I think is something that I heard the other day. I don't remember who it was, but people are too hyper-focused on the short term when it comes to the stock market, and they're not concerned enough about the long term. And I think that that's something that is a very good point. And I think the point is the rates are going to be higher for longer. Inflation is going to be higher than what the government wants or what the Fed wants. And again, because of that, the only option, not the only option, but people are going to lean more towards stocks. And I mean, eventually we're going to get a correction. Eventually that's going to happen, and that probably forces the Fed to cut. Where they cut to, who knows? But anyway, that is the market. I'm going to make a Bitcoin specific video probably in the next day or two, so I'm not going to get into that in this video. So let's get into earnings here. Again, we had another very, very busy earnings week, so I want to get right into that. The big company of this week, Amazon. There were some other big ones, but Amazon was the biggest one. Again, they beat earnings, barely beat revenue. Amazon was up, looks like kind of nicely on the week. Again, the one caveat here is earnings from this week probably weren't quite as good as the previous week, but I still think that they were okay. And that's I think why the market closed a little bit higher on the week, even though they can't, Wednesday was a bad day and we were down quite a bit. The next one is Domino's. This is a company that I have an extremely small position in that I really wish I would have took a larger position in, because my average cost is, I think it's in like the high 300s. So again, I'm up very nicely, but again, it's an extremely small position, so I'm really kicking myself I didn't take a larger position. They did beat earnings and revenue, although it looks like they were actually down slightly on the week. But again, they are really expensive where they're at right now. If you got a nice pullback here, I would definitely be a buyer, but they're just way too expensive. I mean, a price to free cash flow of 36, a PE of 34. They would probably have to come down like 10 or 15% before I would start to be interested, but a very good company nonetheless. The next one is SoFi. Again, I don't have a position. I probably never will, but this is a very popular stock, so I do watch it. Earnings in line with expectations, although they're still barely profitable, which again just keeps me away from them, because again, buying companies that don't make money or barely make money almost always turns out badly. So that's why I stay away. MicroStrategy, they missed earnings and revenue. That caused them to be down a lot, although Bitcoin did come back on Friday, so that caused them to close a little bit higher, but they were still down on the week. Again, I watched them solely because of Bitcoin, nothing really else. The next one is NXPI, Semiconductor. They did beat earnings and revenue. I used to have a position in this company. I still think they're a solid company, but I think that there's just better options here, although they are probably about fair value where they're at right now. But again, if you got a big pullback, I would consider taking a position. The next one is American Tower. Again, I don't have a position, but they are one of the biggest REITs, so I do watch them for that reason. They did beat FFO, although the stock was actually up nicely on the week. So again, congrats if you own American Tower. The next one is Coca-Cola. Again, another one that I watch. It's too expensive. I mean, it's a solid company, but it's just too expensive where it's at right now. I mean, for a company that's growing as slow as it's growing, a 26 price to free cash flow, a 25 PE, I mean, that's just too expensive. If it was at a very clear discount, I would buy it, but it's just too expensive where it's at right now. They did beat revenue and earnings, and they raised their guidance. So a very good week for a very good earnings report for Coca-Cola, although it looks like they're actually just up barely on the week, which is kind of surprising. The next one is GLW, that's Corning. They did beat earnings, although they were down year over year. So again, they were actually up very, very nicely on the week there. What did they end up being up on the week? They're up about 7%, give or take, and they're actually up, looks like about 10% at one point if you bought before earnings. So congrats if you bought them before earnings, but I'm guessing most people didn't. The next one was one of the surprising ones of the week, McDonald's. McDonald's released a pretty weak earnings report. Missed earnings, revenue was up, although it was down year over year. So again, McDonald's missed, and I think they missed by quite a bit, actually, which is surprising for a company that you think would be as steady as McDonald's, that they missed that bad. That definitely is a little bit concerning, because McDonald's is one of the companies, like they're a company that caters towards your lower and middle income people. And if they're struggling, that's probably not a great sign, although again, it could be a one-off. And again, a lot of times if companies like this, again, I don't know the whole story to be honest, but if a company like, let's say, sales in China are way down, then that could hurt them, even though sales in the States are just fine. So that's another possibility there. I didn't read up that much. I probably should have, but that's a possibility for something like that. PCAR, PACCAR, again, they did beat earnings and revenue. I do have them on a watch list, although they were actually down quite a bit on the week. So that's kind of interesting there. Again, that does happen. I'm guessing they lowered guidance or something along those lines. The next one is OCSL. This is I believe this is a BDC. Specialty lending, yeah, I believe they're a BDC. Again, they did miss earnings and revenue, although they are one of the better BDCs. That's why, in fact, they might even be the best BDC, which is why I watched them. And again, they paid a consistent dividend going back to, looks like about 2017, 2018. I believe they were bought out by a different company back in like 2018, 2019. So again, if they can consistently pay that dividend, again, that might not be a bad option. But typically BDCs do not perform as good as the market. So I do watch them though because I think they're one of the better ones. The next one is MLM. They're a materials company. They missed earnings and revenue, which is kind of surprising because I think they're a pretty good company. They were down a little bit on the week because of that. Again, although they are a little expensive, and I think that's probably why they're. AMD, again, another one of the big companies to release this week. They did beat earnings, but they lowered their guidance, which has caused them to be down quite a bit on the week. And again, AMD, again, I still think they're way too expensive. If you look at their, again, price to free cash flow, 216, PE of 283. Like again, that's just absolutely insane. They're way too expensive. I mean, they're not even growing. So AMD is a company that I think is a very clear avoid like the plague, at least based on current valuations. The next one is EXR. Again, I do have a small position in this company. This is a self-storage REIT. They were just short of their earnings. Revenue was up a little bit. They were up a little bit on that news, which is a little surprising to me. But again, it is what it is. If I got a nice pullback in this company, I definitely would be buying more. But I think they're still a little more than even though they're actually a little bit below their historical price to FFO. I don't know if they're going to grow as fast as they did over the last decade, over the next decade. So I'd want them to pull back. I think if they went to like 125 or so, I'd probably pick it up. But I think they're just a little expensive here. LFUS, Littelfuse. Again, they barely beat earnings and revenue. I do have this company on a watch list. I think they're a decent company. Not sure if I ever would pull the trigger, but I do have them on a watch list. They were up on the week. Skyworks. Again, I do have a good sized position in Skyworks. They released a pretty bad earnings report, and they were down quite a bit on the week because of that. Over the long term, I still think they're going to do fine. Over the short term, okay. But over the long term, I still think they're going to be fine. Another one of the big news coming from the last week, Starbucks. Starbucks released a fairly weak earnings report, and they were down big on that report. They were down about 15%, which is crazy for a company that's $85 billion market cap, right? So Starbucks, again, they missed earnings badly. They're off by like 7 or 8%, which is unheard of because typically like 80% of companies beat earnings. So that's really concerning. Over the long run, I still think they'll be fine. I'm actually considering buying them, although based on what I looked at, I would want to get them. I think I have an alert at around $70 per share. If they went below that, I would start to pick it up. I mean, a 20 PE, a 21 price to free cash flow, I think that they're probably roughly going to keep pace with the market. So again, if you look at like the S&P, like a 17, 18 PE, if they get to that, then I'd probably buy. If the price to free cash flow went, 18, 19, that's probably where I would look at it. But I still think they're a little expensive where they're at right now. I think they're going to do fine if you buy it where it's at right now. But again, I would want to get it at a discount if I did take a position. SMCI, again, another one of the stocks that has a ton of hype right now. Again, they missed revenue, and again, the stock was down quite a bit on that news. Again, I still think that this company they're still crazy expensive where they're at right now. They are a solid company, I think, but they're just too expensive. I mean, a PE of 63, just too expensive. They'd have to come down a lot before I would pick it up. MasterCard, again, another one of the big companies to release this week. Again, they did beat earnings. Revenue was about in line. Again, this is one of those companies that is extremely good. I have a position in Visa, not MasterCard, but I think they're both very good companies. They are a little expensive where they're at right now. I'm not necessarily buying either of them, but I think that Visa, MasterCard, like those are arguably two of the biggest just slam dunk stocks I think that exist in the market today. Over the long run, I would be a little concerned at possible competition, but over the next 5 years, 10 years, I think that these companies are just absolute slam dunks. Like they're going to beat the market, and they'll probably even do it in a safer way. So again, I absolutely love these companies, although again, they are expensive where they're at right now. So be careful with that. Ares Capital, again, probably one of the most popular BDCs. Again, they beat earnings. So again, good news if you owned Ares Capital, although they are actually down a little bit on the week. ADP, again, another very good company. If I got a good size pullback in this company, I would for sure be buying. Automatic data processing, the ticker doesn't work for this for some reason. Again, they released good earnings. Again, they barely beat EPS and revenue. Again, this is a $99 billion company. They're not going to be blowing you out of the water. This is more of like a safer long-term play. They're a dividend growth stock, which is why I like them. And again, they beat the market actually fairly easy over the last decade, right? By like 60, 70%. So I really like this company. If we got a good size pullback, I would be a buyer. Where they're at right now, they are actually a little bit below their historical valuations, but I still think a 29 price to free cash flow, a 28 PE, I still think that's a little bit rich. I would say if we pulled back maybe 5%, for sure 10%, I would be a buyer, right? So we're looking at probably 220 roughly would be where I would look to pick it up. And the next one is CDW, again, another company I have a solid position in. Again, they did miss earnings, which is a little concerning. They were down on the week because of that quite a bit, but I'm not concerned. Over the long run, I still think they're going to be fine. The next one is CF. Again, they're one of the bigger chemical companies. Again, they missed earnings. Revenue was in line. Again, that caused them to be down quite a bit on the week. The next one is MPWR, Monolithic Power. Again, this is another company that if you could get it for a good price, I'd be a buyer for sure. But again, they're too expensive. If we look at their valuations here, again, they're below their historical price to free cash flow. But again, that's 59. That's still way, way too expensive. So definitely on a watch list, but not a buyer. Paycom Software, again, another stock that, okay, that's not the right ticker. Another company that I don't mind, but again, I do want to get it cheaper. They did beat earnings, barely beat revenue. They were down on the week because of that. Again, another solid company, but again, I think that there's definitely some slightly better options if you ask me. If we look at their historical valuations here, just out of curiosity, given they were down a lot on the week, they're way below their historical valuations. But a price of free cash flow of 34, I still think that's a little expensive. So if we pulled back another 5-10%, I probably would pick some up. But again, until that, for sure 10%. 5, I don't know. But that's what I would look at for them. TTEK, again, another company I have on a watch list. Beat earnings and revenue. So again, they were up very nicely on the week. Again, obviously getting even more expensive, which again isn't good if you're looking to buy, but that is what it is. The next one is Vici Properties. Again, I do have a good size position in this company. They did beat earnings. Again, the stock was basically flat on the week. This is one of the better REITs out there. I really do like them. Again, a dividend yield of 5.76%, FFO yield of 7.2%. I think that's a no-brainer. They're in a good area. I like them over the long run. Zillow, again, a company that I probably never will buy, but another company that I just watch. Again, they did beat revenue, although they missed earnings, and they were down a lot on the week. So a little concerning if you own Zillow, definitely. ConocoPhillips, again, they beat earnings and revenue. Again, oil, although they were down a lot on the week, which is kind of surprising. But oil companies, again, they've done very well for obvious reasons recently. PH, Parker Hannifin, again, I do have a decent sized position in this company. They did beat earnings and revenue, although it looks like they were down a little bit in the week. The next one is Apple, which I completely forgot about because I was more concerned about Amazon. So again, I completely forgot about the biggest company that released earnings this week. Apple released pretty good earnings, and they were up nicely on the week because of that. So congrats if you are an Apple holder. Again, Apple, I would say Apple, Google, and Amazon are my favorite, like I've said before, of the Mag 7 stocks, simply because I think that they're the best value. Apple, again, I think a little bit overvalued where it's at right now. You definitely would be needing to wait till, I'd say probably 160, maybe 165, but definitely I'd say probably 160 before I'd be a buyer. So you would need a decent sized pullback here. The next one is EOG Resources, which again is my favorite oil and gas play at the moment. Again, they did beat earnings and revenue, although the stock was down on the week, although it looks like that's just a general trend of oil companies in general. The next one is Fortinet. Again, barely beat earnings and revenue. They were down on the week. Again, Fortinet, they're actually probably a fairly good value where they're at right now. A price to free cash flow of 26, PE of 39, price to sales of 8. Again, I think they're a little expensive still. But again, I think you probably, if you do want to take a position, you probably could look into it where they're at right now. And the last one is Universal Display. Again, I do have a good size position in this company. They released good earnings, and then they were up actually quite a bit on the week because of that. Again, I'm not looking to take another position. My cost basis is about 140, I think. So not looking to take another position, although I do still like this company over the long run. So anyway, that was earnings for this week. If you liked the video, please like, subscribe, comment, and stay tuned for more.